Today's video is sponsored by Figure, the largest non-bank home equity loan lender in the US, with over $15 billion unlocked on their lending platform. They're now in the crypto-backed loan space and offering industry-low interest rates when you use your Bitcoin as collateral to get cash. Access interest rates starting at 9.9%, the lowest fixed rate in the industry at 50% LTVs. Whether you're funding a major purchase like a down payment on a home, investing in new opportunities, or even buying more Bitcoin, Figure makes it straightforward and transparent. Visit figure.com/Real Vision or click on my link below to take out a Bitcoin-backed loan with Figure today. Hi, I want to talk to you today about my friends at Bitwise and why they're the best crypto asset manager out there. I've talked on the show often about how crypto is reshaping everything from finance, portfolios, and even macro. Everything's ramping up. We've got tailwinds in DC, interest from TradFi, and growing optimism. But smart investors see all of this and focus on the how. What's the savviest way to seize this moment? And that's why so many investors I know are working with Bitwise today. They've been all in on crypto since 2017. They're OGs. They've got more than 30 products to help investors like you get access to whatever they need or want. They've got a team of more than 100 across the US and Europe, and they have over 10 billion in client assets. You know, a lot of people know Bitwise for their ETFs, how they manage the world's largest crypto index funds and the wide range of crypto ETFs they have. But not as many people realize, Bitwise manages private alpha strategies too, and has SMAs for large investors, and is one of the largest institutional Ethereum staking providers. They really do everything. These guys are true OGs in the space, and they're good friends of mine too. So please go and check out Bitwise. They're really excellent. Go to bitwiseinvestments.com and see all that they've got to offer. That's bitwiseinvestments.com, or just email them at james@bitwiseinvestments.com and let them know that Raoul sent you. Anyway, there's a million ways to access crypto. Explore how you can access it best with Bitwise. And remember, carefully consider the extreme risk associated with crypto before investing. Anyway, thanks so much.
Hey, Real Vision viewers. A quick pause to introduce you to today's sponsor, Axelar. Axelar is building the rails for the next wave of global finance. Not just crypto, but the future of how assets move, how markets connect, and how institutions plug into open systems. Think of it this way. Bitcoin brought digital gold, Ethereum brought smart contracts, but Axelar is bringing connectivity, the secure link between your favorite blockchain and traditional financial institutions, rushing to plug in. It's why top-tier firms like Dragonfly, Polychain, Coinbase Ventures, and Binance Labs are backing Axelar, and why global giants like Deutsche Bank, MasterCard, Apollo Global, and JP Morgan are already building on it. If you believe the future of finance is open, programmable, and interoperable, Axelar is the gateway. Want to digest deeper? Visit realvision.com/Axelar or follow on X at Axelar. That's AXELAR, the gateway to open finance. Today's video is sponsored by VeChain, the leading layer 1 built for real-world adoption. VeChain launched all the way back in 2015. Built for real-world utility before most people had even heard of blockchain. One of the oldest protocols and boasting 100% uptime since launch, it's known for powering real-world solutions and partnerships with global brands like the UFC. Now, they're entering a new, user-focused chapter powered by adoption in the VBetter ecosystem and an ambitious technical roadmap dubbed the VeChain Renaissance. Renaissance builds on VeChain's history of real utility and adoption to deliver a faster, more flexible core protocol, designed to meet the needs of builders and drive mass adoption. The next phase kicks off on July 1st with the launch of Stargate, VeChain's new staking program. It's an evolution that brings VeChain closer to delivering its vision of a world powered by Web3 without compromising on reliability or stability. The future is here, and it's scalable, sustainable, and evolving with purpose. Check the links in the description to find out all you need to know about VeChain Renaissance and the updated staking opportunities available through Stargate.
Hi, I'm Raoul Pal, and welcome to my show, The Journeyman, where I travel to that nexus of understanding between macro crypto and the exponential age of technology. Now, I've obviously been in crypto for a long time, since about 2012 is when I was first involved. But one of the great interviews I did of all time was the interview with Michael Saylor back in 2020 that kicked off this whole stampede of the kind of Bitcoin treasury strategy. And I'm traveling right now. And so I thought, what can I bring you that would be interesting for you to learn from the genesis of the idea of why Michael Saylor did this? Now, you've all seen hundreds of Michael Saylor videos, but this was the first long form one with him. It was the one where we really dug into why he got there, what he saw in it all. And I thought it would help you frame it. So anyway, enjoy this video from 2020, and I'll be back next week with something fresh and new from an OG in this space who got me into crypto back in 2012. Okay, enjoy. Join me, Raoul, as I go on a journey of discovery through the macro, crypto, and exponential age landscapes. In The Journeyman, I talk to the smartest people in the world so we can all become smarter together. Michael, great to get you on Real Vision. You've become suddenly a legend in the crypto business and kind of a real thought leader for many people. And I just thought it would just be fascinating to get you on. But before we go down that kind of crypto journey, I'd love to hear a bit about your background, where you came from, and also MicroStrategy itself.
Okay. I'm an Air Force brat. My father was in the military. I lived on Air Force bases my entire life. I got a scholarship from the United States Air Force to go to MIT. I went to MIT, and I was that generation where I read science fiction books. I read them all. I was a big fan of Robert Heinlein. I decided I was going to be a rocket scientist, and I got an aeronautics and astronautics degree with a specialty in spaceship design. And while I was there, I stumbled across this school of management, system dynamics, the construction of computer models to predict the future. And I ended up getting a second degree in science and technology and society and the history of science. Wow. So that was formative because it was all about paradigm shifts, the structure of scientific revolutions. And how did people decide to embrace nuclear power or electricity or petroleum? And a lot of people think that technology just kind of is a modern thing, but of course, and they think that technology companies are a class of investments. And I'm always amused when finance people talk to me about the tech sector, because it's kind of an ignorant statement. There's never been a successful growth company that wasn't a technology company once you understand technology for the past 100 years. John D. Rockefeller was a tech company. General Electric was a tech company. Kraft and Hershey's were tech companies. So studying technology for the past 100, 200, 300, 400 years and why people do it, that was interesting to me. I thought I was going to be a fighter pilot astronaut.
Right.
But so I learned to fly in the Air Force. And in my senior year, Reagan won the Cold War. They ramped down the military, cut it in half. And I had a macroeconomic event combined with just a random personal event that catapulted me into business. The macroeconomic event was the end of the Cold War, the drawdown of the United States military. And the United States had paid for my education, and I was like on the hook to serve. I thought I'd be in the military 10 years. And my final flight physical, my senior year at MIT, they diagnosed me with a benign heart murmur. And that disqualified me from flying jets. Now, by the way, the hilarious part of the story is they kicked me out of the aviation program. I was a little bit dejected. And then the next week they came and they said, you can join the Air Force Reserve and be a civilian. And I was going to get paid 3 times as much money as a civilian as I would have made in the Air Force. So I thought, well, you just gave me a free education and I get to not pay the money back. By the way, the week before they said, well, if you don't go in the military, that's AWOL, you go to jail. Okay, so I went from you're going to be in the military for a decade or you go to jail to Ronald Reagan is giving you the gift of your freedom. And by the way, to make it easier, if you want to be in the military, you have to wait 2 years working a part-time job before we call you up, and then maybe we'll call you up. So I kind of got a kick out of the military, and then a doctor said, you can't fly, and I was kind of dejected, and I thought, well, this must be a sign from God. I should do something else. So I joined the Air Force Reserve, and I left MIT. I worked for about 2 years, and I was going to go get a PhD because I had a very simple list. Every red-blooded American male in the 80s had this list: rock star, astronaut, fighter pilot astronaut, Top Gun, right?
Obviously, yeah.
Professor.
Okay.
Or CEO.
Ever wish you could access cash without selling your Bitcoin? Ledn makes that possible. Ledn is the global leader in Bitcoin-backed lending. Since 2018, they've issued over $9 billion in loans, and not a single Satoshi of client funds has ever been lost. Here's what makes a Ledn loan different. With a custodied loan, collateral is not lent out to generate interest. There are no credit checks. Funds in less than 12 hours, no monthly payments, and repay whenever you want with zero penalties. And they just don't talk security, they prove it. Ledn offers proof of reserve reports, verified by a top accounting firm every 6 months. Ledn is 100% focused on doing one thing better than anyone else, giving Bitcoin holders a secure and transparent way to unlock liquidity without selling. Learn more at www.ledn.io.
So I tried my rock star thing in high school, and then I realized rock stars don't make any money, or at least 99.99% of musicians make like $20 for the gig.
I tried it and I just can't play guitar. I'm just not coordinated enough, so I had to give up.
For one reason or the other, we give up on rock star.
Yeah.
That was our first goal. The second goal was fighter pilot astronaut, and that was dashed by some physician.
You were close.
By the way, the hilarious part of the story is a decade later, I go back to the doctor. He goes, "Oh, you're perfectly fine." I said, "I can't be fine. I have benign heart murmur. I have mitral valve prolapse." He goes, "No, you don't." I said, but I'm sure I do. They kicked me out of the Air Force because I had it. He said, "Oh, that was a mistake. They used to make that mistake all the time. We have much better equipment now." So I left my fighter pilot astronaut track because of a mistake, and I ended up working. But I left the military track on March, my senior year. I missed all of the financial aid applications for fellowships. I couldn't afford. I had no money. I couldn't afford to go to a PhD program. So I worked for a year. I applied for all the fellowships. I got into MIT and Harvard, and I was going to go get my PhD and be a professor, and life was done. And just as I did that, I informed my boss, and my boss worked at the DuPont Corporation, and I had built a computer simulation to predict the return on the investment of about $1 billion of capital investment in titanium dioxide. And they needed that model to get the board to give them the money. So when I tendered my resignation, the guy saw his $1 billion of capital going away. And I'm sure he said to someone that works for him, give the kid whatever he wants, but he can't quit yet. And I was 24-year-old. I happened to be important to a guy that needed $1 billion. I didn't know I was important. I was just the right place at the right time. So he tells a guy that comes to me and says, "Okay, well, we'll give you a raise if you stay." I said, "I don't want a raise. I want to be a professor." They said, "Well, what do you want?" I said, "Rock star, astronaut." There's only one other thing I want. I want my own company. So I said, "I'll stay if you finance my. I got millions of dollars of contracts. I got $250,000 up front. I got free office space for a couple of years. I got all the computer equipment, IT support. 10 people from DuPont came over to work for me. They didn't take any equity. So it's the best deal ever. And I did this one negotiation, my best negotiation of my life. I had zero money. In fact, when I started this company, I went to a bank and I got the only unsecured loan that you can get as a 23-year-old, which is, I said, "I want to buy $5,000 of furniture." They gave me a $5,000 furniture loan. I was living in an apartment at $700 a month with milk crates for bookshelves. And I thought, $5,000, that'll last me 6 months. Maybe that'll make it. So I got a $5,000 furniture loan. Then I said to DuPont, I need $100,000 cash check up front to start. You can imagine these guys in suits, and they thought the kid is out of his mind. And they said, we can't give you that. You might take that money and run off to the Caribbean, like maybe where you are right now. And I was like, well, you got to give me the money because and this is my negotiating strategy. I said, you got to give me the money because I have no money. And they looked at me and they're like, you got a point there. You got no money. So they literally wrote me $100,000 check. And by the way, Raoul, at this point, on $700 a month rent, I literally believed that $100,000 would last me for 7 years. I calculated I had 7 years of capital, took the money, and I started MicroStrategy. And we were 10 people the first year. And I thought, I'm going to defer my PhD program. And when this thing fails, I'm going back to college. And the next year we were 20 people. The next year we were 40 people. The next year we were 80 people. The next year we were 300 people. And the next year people said, you got to go public. And at some point,
so what year are we in? What year are we in now?
I graduated MIT 87. I started this in 89. Started MicroStrategy in 89.
Wow.
And again, I got so lucky. Lucky that I got misdiagnosed by that doctor. Lucky that Reagan won the Cold War. Then I got lucky that the dot-com boom took off because if you recall, between 96 and 99, everybody was going public. And we were just coming of age in 96, 97, and in 98 we came public, June of 98. And of course, if we had 2 years late, wouldn't have happened. 2 years early, wouldn't have happened. We came out right through that window. And by then it was just too late for me to go back to college. And I was stuck as a CEO, for better or worse. So that's how MicroStrategy was founded. It was, if I couldn't do it again, like in that Twilight Zone episode where the CEO goes back and gets all of his knowledge to try again, he ends up the janitor. If you put me back there again, I'm like, well, I need the Cold War to end, and I need a doctor to make a mistake, and I need someone to tell me to do the opposite of what I wanted to do. And then, it's just all random.
So were you a risk taker with the firm? So as you go through the journey from going public, so everyone's a risk taker when you start a business, you have to be. But then after that, were you a risk taker? I mean, how did that kind of corporate journey evolve, you as CEO?
In hindsight, I was a risk taker, but at the time I didn't realize I was taking the risk.
The most dangerous kind of risk.
If I could go back, I would give myself counsel to do things differently. But yeah, we did take risk. Although one thing that I did is I just was always very passionate about technology. So we launched MicroStrategy as a business intelligence company, and we were always inventing the next thing. By the way, the first risk that I took was I created a piece of software to create computer simulations on a Macintosh. And older, wiser minds, professors from MIT told me, that's an awful idea. The Macintosh is not going to win. Everybody knows that business people use the PC. Okay, we were like $1 million company then. I said, well, I guess you're right, but the Macintosh is much more beautiful and it's better technology than the PC. So we doubled and doubled again. And the professor that gave me that advice was still running a $300,000 a year consulting business. And we were $4 million with the wrong technology. So then the professor asked me what I was doing. I said, well, I'm creating executive information systems using this spreadsheet called Wings with a hyperscripting language. And that professor said, well, all my friends tell me that Excel is going to be the choice for all big businesses and Wings is going to fail. So I said, well, you may be right, but Excel doesn't have a scripting language. So we'll try it for a while. Well, we doubled again, and we got to be 30 million. And he was right. And he is still running his $350,000 consulting business. And then he asked me what I was doing. And I said, well, I've decided to convert to Microsoft Visual Basic, and we're going to create relational analytics on top of big databases. And he said, well, do you have any experience with big database? I said, no, none at all. And he said, well, Visual Basic is not what people use for software engineering. They use C++. I said, yeah, but I can't figure that out yet. So we did it, and we doubled again to $60 million, and he was still running his $350,000 consulting business, not making a mistake. At which point I realized, you're kind of an idiot. You need to write us the software in C++. So we took the money that we made making the first set of mistakes, and we wrote it in C++, and we doubled again. And then, I'm sure someone would have said, don't go public. But basically, I would say we mistake.
You're not very good at listening to people. That's your problem.
I always chase after these shiny things. Okay, but there's a method to the madness, which is you're better to be correct and do something that works now and then figure it out 3 or 4 years from now than to do nothing and sit and wait and be beat to death. So, the short of the story is, I took like 6 or 7 risks, and every 3 years we had to invent something new. Web intelligence, mobile intelligence. We launched a business called alarm.com. Oh, by the way, I got really enamored with domain names. I bought MicroStrategy.com for my email, and then I got lazy and I thought, I hate typing micro. Wouldn't it be better if I just had the email Saylor@strategy.com? So I bought it. Back in the day when you could buy it for $100,000, I bought the word strategy and still own it. So Then I thought, this is kind of cool. What other words can I buy? So I thought it'd be cool to be Saylor@Michael.com. So I bought Michael.com. And then I bought Mike.com. And then I bought Wisdom. And by the way, the world needs hope, right? Everybody needs hope. I own hope. I own hope.com. So I bought all these domain names, Hope, Alarm.
Do you still own them?
I own Hope. If you would like Hope. By the way, about once every month, someone wants to buy Hope from me, or they want some Hope. But they always offer me like $100,000 or $200,000, and I'm hoping for $100 million. So I just keep it, but that's a meandering way of saying I got really enamored with domains back in the mid-'90s to the late '90s. And then I started thinking, these are like real estate and cyberspace. What if we could commercialize them? So I commercialized strategy.com, and I created this it was like a Twitter subscription. You could sign up for alerts to anything under the sun. And the company went from 0 to 100 million in 1 year, and then went from 100 million to 0 in 1 year. And it was interesting. I learned a lot from that. I had the skin flayed off my back. But then I went on to alarm.com, but we launched these under the MicroStrategy umbrella. And the idea behind Alarm was, what if you could wire all your home alarm systems into the internet, and they would talk to you and talk to your phone, and they would call you and tell you if someone broke into your house. Not a brilliant idea today. Amazon and Google and Apple are doing it. Pretty unique in the year 1998 or 1999.
Wow.
So we launched that, and we launched it on alarm.com. So if you go and type alarm.com right now, what you'll find it's a $1 billion company. We eventually spun it off. We made a decent amount of money off it. Then they went public with Goldman Sachs, and it's a $1 billion NASDAQ traded company now. So that's one of my babies. It flew away from home. I created another one I bought Angel, Raoul. Angel, A-N-G-E-L. My theory of these was very simple, which is people have a hard time spelling, and they have a hard time remembering things. So everybody gets taught how to spell angel or hope when they're in high school or junior high. So if I tell you my charity or my company or whatever is on Angel, you go A-N-G-E-L. You don't got to go to the Google. You don't have to go to Yahoo. You don't have to search for it. If you search, by the way, for voice on Google, you get 1 billion hits. You have to sift through 1 billion. If your name of your company is something voice or whatever, voice of the people, there's 1 billion things you're fighting with. If you own voice.com, you go to the top. By the way, not only do you go to the top of the search engine, right? Nobody needs the search engine. You can bypass the search engine. Everybody knows how to type in voice, right? So the idea was own the word in cyberspace. It's a scarce asset, right? It's
Fascinating.
For 10,000 years, people have been using the word. So own the word. So we basically commercialized on Angel the idea of interactive voice response, like Emma. Sorry, not Emma, like Siri, Siri or the like, or Alexa. And we did it back in 2000. Anybody could basically build an interactive voice response application. We plugged it into your telephone. And that started to work. And it was a SaaS application. We ran it out of the cloud, and you plug it in your telephone. And we built it to a certain point, but it was a totally different brand. It was a different business model. And I had an enterprise software company, and this was not enterprise software, and it drove all of the accountants crazy. So eventually we realized it was more valuable to someone else than it was to us, and we sold it for about $120 million. And so that was my next little hit with a domain. And then at some point, I started to realize that if you're not the best in the world at something, nobody wants you for anything. Okay? And it's like, in the early days, we all thought, well, I got $30 million. I can build this app. Everybody wanted to be WhatsApp. Everybody wanted to be Instagram or whatever. But if I had a nickel for every time someone said, I have an idea for a mobile app, it's like, yeah, you do, right? And it's worth a nickel. I launched all these things. Some worked, some didn't work, right? And I tried many of them. And then I eventually realized that you need to focus, right? The first hurdle is can you acquire a thing? Can you build something? Okay. You generally can. I mean, can you buy that thing? The second hurdle is can you compete in that market, right? Can you maintain a competitiveness in that market? That means investing every year as much as the next best person is investing forever, right? Can you stay competitive? That's a higher hurdle. But the highest hurdle is, can you commercialize or not? Can you profit from the thing? So a lot of people can do a thing.
Yeah. Most
people can't do a thing better consistently forever. And even if you can you make money off it? Okay, so this is an articulation of stoicism. Just because you can do a thing doesn't mean you should do a thing. And every young man, he sees everything. He's like, I have to do all this stuff. I have an idea for this and this and this and this and this. So I went through that journey of do this and do. And
it kind of worked for you. You had more successes than failures.
I failed up. I got a lot of scars, but it was humbling. You have to have the failures along with the successes, because if you don't fail, eventually you get this big failure where it all comes crashing down. So I guess I adopted along the way this idea of stoicism, and I realized that you need to put all of your heart and soul into one thing. And so at that point, we sold off the one company, we spun off the other thing, and I realized, my destiny was I could run MicroStrategy and be the world's best business intelligence company, solely focused upon that one thing. That's what we're going to be. And I went back to doing that, and I let the other things go, and I let the domain portfolio just sit. And we were the little engine that could, focused upon making our business intelligence better with web intelligence and mobile intelligence and cloud intelligence. And now our cool thing is hyper intelligence. It's like know the answer before you ask the question without clicking on anything. And I'll tell you about that in a bit if you want. But
yeah, I'm super interested.
I was just busy minding my own business. I used to tweet. I used to tweet all the time. I got off Twitter. I focused on my core business. And then eventually I came back. I discovered Bitcoin. The day I put on Twitter that we bought $250 million worth of Bitcoin, the entire hive mind of crypto Twitter came to life. And they went through every tweet that I had put out there, 1,000 of them. And then someone dredges up the tweet where I had, once upon a time in my eminent brilliance, discovered that Bitcoin was dead and it was going to zero. And I enthusiastically posted that back in 2013. And everybody wanted to know what I thought about that. And what I got to tell you is I didn't remember I ever had an opinion on Bitcoin until they reminded me that I had once been utterly wrong on it. And so I guess that's very humbling, but I love the entire crypto Twitter community. I mean, I think they're the smartest, coolest, most interesting, charismatic individuals. You know, when they're right, they're right. When they're wrong, they're still kind of interestingly right. And I think they make us better versions of ourselves. But putting that aside, I was minding my own business, running MicroStrategy, try to be the best business intelligence company we can. And I would say that's 150% focus on the P&L. And I was not, you know, and with regard to investment, my investment world consisted of this, Raoul. It's like I was a technology investor. In the year 2012, I published a book, The Mobile Wave. And in The Mobile Wave, I in essence said, software is leaping from out from under your desk, beyond your laptop, onto a mobile device. It's going from solid state to liquid state to vapor state. And it's going to be like vapor all around us. And what that means is that the entire software world is becoming networked vapor state, incredibly powerful dematerialized versions of products and services. And so the summary is Apple Computer's going to rule the world. Buy Apple, Facebook, Amazon, Google. Go, if you read the book, you know, that's what I wrote. I mean, the epiphany was 2009. I asked my niece, who was 9 years old, you know, what do you want for Christmas? And she said, I want the big Apple. And I said, you want a trip to New York City? And she goes, no, I want an iPad. Okay, and I thought, Apple's going to replace New York City. Apple's going to rule the world. So my investment thesis was quite simple. You know, Apple, Facebook, Amazon, Google. A simple way for a tech investor to think is you buy a dominant network, according to Metcalfe's law, that's won the market. The mobile network, the information network, the video network, the social network. I just named Apple, Google, YouTube, Facebook, commercial. Very simple. Buy the dominant network and wait while all the naysayers on Wall Street and all the talking heads and all the people that know better tell you why hedge. I hate the word hedge. I could tell you Wall Street luminaries in 2012 would lecture me on, they would say, you shouldn't buy too much Apple stock. We've got a mutual fund, and what we do is if your Apple stock gets to be too much of your computer portfolio, we sell it and buy HP and IBM to diversify you. And I said, well, guys, don't you realize that eventually Apple's going to eat them all, and there won't be a need for HP or IBM or anybody? And what happens when Apple is 150% of all the profit in the entire tech industry, right? Like, well, we don't see it that way. Okay, that's what they thought. And then they go, well, we're going to protect you. If your share of your portfolio is too much technology, we're going to sell technology and we're going to buy all these other assets. And I was like, but guys, what happens when technology eats everything and there aren't any other assets? Okay, in my opinion, and I'm going to be snarky here, I think an ignorant investor thinks that technology companies are a part of the index, or they're a part of the industry. In my opinion, as a science historian, John D. Rockefeller was running a technology company. If you study the history of Standard Oil, he did everything that Jeff Bezos did 100 years earlier. And if you study General Electric, once upon a time, electricity was pretty technically interesting. And if you've actually been to the Hershey's factory in Pennsylvania, not a one of these investors could build the damn thing. Hershey's factory is a computer built in steel, welded, which is the most majestic creation of mankind you could possibly imagine. Imagine writing a computer program in billions of dollars of steel and moving parts that spits out 100,000 candy bars an hour, without contaminating them. It's you think it's not technology or craft. I create ketchup. The technology was I had clean room technology. I had to take the tomatoes, manufacture the ketchup, put it in a sealed container without any bacteria in it so that it didn't rot over the course of the next year. Okay, it's clean room technology, no different than Intel semiconductor chips. So when these people think, oh, well, we're not buying a technology company, it's like every company that ever succeeded was a technology company. And the only reason it grew was it had technology superior to everybody else. So I happen to, back to 2012, I thought my investment thesis is you buy technology companies that have a dominant place in their industry that are going to eat everything. And then you just wait while all the people that don't really think hard about this short you or diversify out of you. And eventually, some 80-year-old investor that's got more money than God will discover that Apple Computer is not some newfangled, gimmick, right? Eventually. And he will buy it at 10x what you bought it for. And then it will double again, right? And he will make some money and you will have made some money, but you'll have to be beat to death by well-educated, well-intentioned, diversifying experts while you wait for that to happen. And they're going to say things like, we're going to hedge you out of this, or we don't want to take too much risk on Apple, don't want to take too much risk on Google. What if you had diversified your Google search engine into every other search engine for the last 20 years?
One of the things I've talked about many times is there's a lot of people who want to trade. They think trading makes money. When you look at people who've built real wealth, it's basically one bet. Bill Gates is who he is because he didn't sell his stock, essentially. And that's the same. People take one clear bet, filter out all of the noise, and just pursue it.
Raoul, I listened to your phrase irresponsibly long, right? But it's really tongue in cheek. You're not irresponsibly long. You're just unfortunately rational. Or maybe the word is like maybe. Slightly early being rational, like you're making a rational decision. What's the word for unpopular? You're rational and unpopular, exclusively rational. Maybe that's the word, exclusively rational. So once you understand what's going to happen, you kind of got to do it. I bought a lot of Bitcoin recently, like over the past.
Before that, why the hell did you have so much cash?
That
was the question I was thinking. Okay, great. You bought Bitcoin. How come you had so much cash?
Aren't you supposed to make cash if you're in business? You're supposed to make money.
But what do you do with it? It's just sitting in the business.
Okay, well, this takes me back to where we went off on my little tangent, which is I was minding my own business, running MicroStrategy, where, running the P&L. I was a wage earner, you go and you make a salary and you spend less money than you make. It's like it's a 20th century idea. My dad taught me that. Like Depression era economics, spend less than you make. So we were making money, spending less than we were making, putting cash in the bank, and we're struggling to compete against, my competitors are IBM, Oracle, SAP, Microsoft. They're all 100 times bigger than us. We're the independent. We're the Switzerland. So we're doing that. That kind of takes up a lot of your attention. And I'm not really paying attention to macroeconomics. My investment thesis, as I said, was buy tech stocks. But you can't buy tech stocks as a public company CEO and put the Treasury into tech stocks. And you certainly couldn't do it in the year 2012. You might do it in your personal portfolio. But the conventional wisdom, if you're running a corporate treasury, is you're going to put cash and you're going to buy short-term treasuries, short-term T-bills. And I happen to believe before the financial crisis, I remember the time when you could make 5.5% interest on overnight money.
Mm-hmm.
We're getting 5.5% yield. You have $500 million. You're getting paid $30 million. By the way, I happen to remember when savings accounts paid 6% interest. It's like, and by the way, we didn't think we were getting a good deal from the bank. We thought that was totally reasonable. And every conventional wisdom was the risk-free cost of capital is 6 to 8%, and then you get a tack on a risk premium of 4%. So your real cost of capital is 12% to do anything, and that's the old day. So that's the way I thought about the Treasury. And then I thought, and then there were other people, what else can I do with the money? You can buy your own stock back, or you can buy another company. Now, I teach a course in management theory to all my managers, and my number one question is, how do you wreck a software company? In my history, and by Raoul, I'm like the longest presiding public company CEO in the enterprise software industry. Nobody has been CEO of a public enterprise software company longer than me. 22 years, 88 quarters. I count them one at a time. Everybody came and gone. Okay, how do you wreck a software company? You have an answer for me? What do you think? Number one way to wreck it.
I'm assuming it's going to be acquire somebody else.
Make a acquisition. Make a bad acquisition. Okay, bingo. The CEO of SAP comes in. He lasts for 9 months. He buys autonomy. They take an $11 billion write-off. It's pretty impressive to burn $11 billion in 11 months on one transaction that you probably spent, I don't know, a few hours on. I mean, like, how many lifetimes, a million lifetimes to make $11 billion? So the number one way to kill a company is make a bad acquisition. So I got all this cash. Do I go buy something? I have lived long enough to see 90%. How about Microsoft buying Nokia? That was a good idea, right? By the way, you could have seen that one coming a mile away. That was the most awful idea you could imagine. You want to count the number? 90% of all acquisitions end awfully, right? And there's a few accretive ones. If you buy a small company, pump it through a massive distribution channel, jack it up by a factor of 10 with no variable cost, maybe it works. But acquisitions are bad. So I'm not going to buy a company. So what else do you do with the cash? You buy your own stock back. Okay, how many companies have gone Toys R Us, gone bankrupt because they bought they lever up, they issue a massive dividend, they drain the capital, right? Drain all the capital out of the company. They're running on what happened if you were actually running on vapor when COVID hit?
Yeah, it's all over.
Everybody is insolvent. They're all out of business overnight. Okay, so that's another way to kill the company. You drain all your capital. So what's left? What the heck is left? Okay, Steve Jobs is my hero. Steve Jobs had a near-death experience with his company. Apple Computer was almost, there was a point when Michael Dell told Apple they should just give the money back to the shareholders and shut down, right? That's a tweet you probably don't like coming back. Okay, so Steve Jobs kept all that cash, till the day he died, and they accumulated. They didn't buy back the stock. I thought maybe I would like MicroStrategy to not die, and so I was going to keep the capital. And by the way, so I can serve the customers. Yeah, you have nightmares of your CFO. The nightmare is you let a customer down, right? Like when someone actually invests $10 million in my company software, and then they build something with it and they deploy it, you're going to go tell them, oh, we decided not to update the software? Let me put it a different way. How would you feel if you put $100 million into Bitcoin and then the miner said, we're turning off the rigs, and the developer said, we're not going to patch the bug or upgrade, and so it's just going to stop working, right? So you have an ethical, moral obligation to your customers. And a lot of times these CEOs, they kind of get cute. This is the problem with the LBO guys. We're going to get cute. We're going to buy it. I'm going to buy Marvel Comics. I'm going to leverage it up, drain the capital out of it, and bankrupt Marvel, right? happen, right? Sad happen, right? So don't want to do that. So what can I do? I just leave the cash in the bank, and I'm buying the stock back at some rate. And then along comes COVID. And COVID is this transformational experience. Thomas Kuhn in The Structure of Scientific Revolutions, which is the seminal work on the history of science, he wrote, when the paradigm shift comes along, right, the old guard, when we invent antibiotics or the science of sterilization or nuclear energy or whatever it is we invent, the old guard rejects it. No one accepts it until they're dead, unless there's a war. And the one thing that'll get people to change their mind is when they die and their kids take over. That changes some minds, right?
Really?
And the other thing that gets people to change their mind is a war. World War II, and as Trotsky said, you may not be interested in war, but war is interested in you. And when the war arrives, you all of a sudden get interested in stuff that you were able to ignore because it was of an academic interest to people somewhere else. So this year, we got two wars. We got a war on COVID, and by the way, what's the war on COVID done? I would have fired you, Raoul, if you told me you wanted to work from somewhere other than my office. I would have said, you don't show up to my office, you're not sitting next to me, you don't have a job here. Last year, I was firing people that didn't want to come to work. Let me tell you what happens next. COVID hits, lockdown hits. I'm hating that idea. Then I got to have a meeting. At 9 a.m. in the morning, we got a meeting, and we're on video conferencing technology A, which I will not mention. And the line drops, the sound doesn't work. There's a warble. I throw a little hissy fit. All my IT people scramble. By 11 a.m., we're on video conferencing technology 2. And I got 12 executives, and we're talking blah, 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 blah. And 2 of the executives freeze, and one of them doesn't work. And I throw a second hissy fit. By 1 p.m., they're like, well, Mike, we've got this thing called Zoom, and we haven't tried it yet, but we thought we might try that. I said, hook it up. By 2 p.m., we're using Zoom. It's working well, like you and I are working well. By 4 p.m., email goes out from the CEO to the entire company. Zoom is now the corporate standard. We will discontinue all other uses of video conferencing. Everybody in the company will be certified on Zoom webinars, Zoom video recordings, a stipend to purchase your own home microphone will go out to everybody. Buy green screens if you need to. I expect it to be done. No more meetings other than Zoom. By 9 a.m. the next morning, 2,500 people have turned left, okay? That's what war will do to you, okay, in a hurry. It's like, because you got to. Now, the first war was the COVID war, and that changed everybody's P&L. And that's half the business. I have a $500 million operating business, and we sell enterprise software, and in a matter of weeks, we needed to figure out how to sell that stuff virtually and how to deliver service virtually. And 500 consultants went from being on site to being remote. And the war hit, Raoul, and we started worrying about what's going to happen to our business. Nobody knows. 4 weeks later, 500 people had gone remote, and I was waiting to see whether a meteorite was going to hit me on the head, and whether there was going to be mass destruction, would the revenues crumple, would customers go ballistic crazy? Okay, and then here's what happened. We stopped spending $5 million a quarter on running around, on flying around in hotels. Our next $15 million worth of marketing events, trade shows got canceled on us. Then we realized we couldn't stage $150,000 symposiums, even if we wanted to. And then we realized that every expensive sales and marketing and services activity we had previously heretofore engaged in was no longer appropriate or practical or possible or relevant or necessary. We're like, I think I just made $40 million a year. And by $40 million a year on a $500 million a year revenue stream, I got kicked in the ass with a golden horseshoe. I don't want to make light of it because a lot of people are suffering a lot of pain. Okay. And there's one person's cost savings is another person's revenue, right? So if you look at the other point of view, there's a lot of people in the events industry, the hotel industry, the airline industry, et cetera, and they're suffering, right? But I'm the CEO. I have to be the fiduciary for my shareholders and for my customers. And at the end of the day, what happened to the P&L is we realized we were going to be much more profitable and be much more efficient after this, despite the CEO kicking and screaming, being dragged into the virtual age, right? Right. So that's me. I had an opinion. I was wrong. War hit me. Bang on the head. Okay. I see it differently today. And by the way, at that point, I saw what everybody else in the virtual world had been seeing so clearly 3 years before me, 4 years before me. But I had to go through 3 different vendors, and I had to change my technology. My customers had to be forced to take my technology. My employees had to be forced. If I had walked in and I'd said to the CIOs that I deal with, I'm not going to meet with you face to face. I want you to Zoom to me. 12 months ago, they would have told me to, go pound sand. So what happened really was the war changed everybody's behavior, right? And so we got. Now I'm going to pick, it's a let-in quote, right? I mean, there are decades when nothing happens, and there are weeks when decades happen, right? And so the war didn't change me. The war changed everybody. And so my P&L is different. My operating income is different. And now that takes us back to the balance sheet. The balance sheet, which was an afterthought. I got a bunch of money. I'm buying some stock back. Our stock, got hammered through the floor. And then what happens? So I'm watching the market and I'm living the pain of Main Street, and I'm watching that all of these operating businesses are getting destroyed. And it's just the most horrific, awful thing of my career. Horror, right? It's like I have no words for it. I'm not even going to articulate the words for it, except for to say, I watched and felt with a horrifying pain the dismantling of my entire worldview, of which not a big fan. Okay? Now, having watched that change, then I watched a V-shaped recovery with talking heads on MSNBC, and I just watched the market go like that, and I watched every equity go through the roof. Apple stock it doubles, even though any rational person, how can Apple be worth twice as much when half of the world's economy just got wrecked? And when their revenues and their earnings are looking constant. So the earnings multiples blow through the roof, right? It's like, and then I watch, this is one that blows my mind, Raoul. If you're a bond salesman and you said to me, Mike, I have an idea for you. I want you to buy 30-year government bonds that are going to yield 2% interest for the rest of your life. I said, are you out of your mind? Are you out of you must be crazy to sell me these bonds. Those bonds had a 22% gain in 12 weeks. So you would have made a 22% gain on the long bond index. I'm like, and I feel like an idiot. Like I would have made money buying bonds at 2% yield for the rest of my life. I would have made money buying leveraged equity of everything as the world is going through the floor. And I'm holding my little bucket of cash as this is happening. And that takes me to my second war. But the first war is the war on COVID. The second war is the war on currency. But like people say there's a currency war. I heard it. I didn't understand it. I thought currency war, by the way, I don't even know if everybody agrees or even interprets it the way I do. I thought currency war was the U.S. wants to weaken its currency so that our exports are more affordable in Europe. I thought, well, that's kind of cool. When the currency weakens, all of my revenues in Europe denominated in the euros go up by 20%, and my revenues in dollars go up by 20%, and it's good for my stock in dollars. It's like that's kind of cute. That's our currency adjustment. We get that every quarter. And if the U.S. dollar is weak, we feel good about it. When the U.S. dollar is strong, we have currency headwinds. Okay, that's second order currency war. Okay. The first order currency war is everybody in the world declared war on currency, and your $100 million in the bank that bought a bond that, maybe I buy a bond for $1 million that yields $50,000 a year. Okay, that's an asset that's interesting to me. I want to retire. I buy $1 million bond yielding 5% interest, and I get $50,000 a year. When the currency war hits, now that bond trades up to $2 million, and it yields $50,000 a year, but it's 2.5% yield. So what happened was the bonds shoot through the roof, and they appreciate by 100%. What really happened in the past 12 weeks is assets. We saw asset inflation of 25 to 40%. Okay? CPI is such a misnomer, right? Like people talk about inflation like it's CPI. Well, you can measure the inflation rate of consumer products and services. Yeah, I buy a Domino's pizza and I buy Netflix and I buy YouTube. Those aren't inflating. When I measure the market basket of consumer assets, it's like my retired dad would like to buy $1 million bond that yields $50,000 a year in interest. When I measure that, you're talking about 6, 7, 8% in a normal year as the money supply increases. All of the things that I want to buy, I'm being snarky, all the things I want to buy are going up 8% a year in a good year. All the things that are being given away from me that are manufactured by machines and robots.
There's also a function of this, and just listen to you as I just clarified a thought for me. Right, the function of inflation is generally driven by demand. Right, I don't believe it's necessarily fully a monetary phenomenon. Maybe demand is part of it, but demographics plays a big part. Right, the largest demographic wave of all time are the baby boomers. Those guys, guess what they want to buy? Retirement assets. And so there's a perceived value in that. So it's kind of crowded within certain things, and it's created this enormous bubble in it.
And that's where my dispute is with all the entire media fixation on inflation as CPI. It's like, do I want to buy $1 million worth of Domino pizzas, and do I want to buy $1 million worth of Netflix or $1 million worth of consumable products? Or do I want to buy $1 million worth of assets that let me not work for the rest of my life? Well, they're measuring the things that are easy to manufacture with a robot or a factory. They're not measuring the things that I want. Because the things that I want are scarce assets that have a yield. And let's take a share of Apple stock. Well, you wanted a share of Apple stock when it was quarter of what it costs today.
Yeah.
Okay. It now costs 4 times as much. How can you say inflation is 2% if the thing I wanted to buy went up by 400%?
Without the underlying business changing.
Without the underlying business changing. So now we come back to currency war. The war is on the currency. And the result is 25% inflation on if you're holding currency and you want, and what can you convert Treasury assets to? You can convert them into other assets. Okay, I'm not going to buy Domino's pizzas with Treasury assets. I'm gonna eventually buy a stock that has a dividend, or I'm a stream of cash flows, or I'm going to buy a bond that is a stream of cash flows. And right now, the bond that I can buy is going to yield 1.3% interest for the rest of my life. So now you start thinking, I didn't have to really think about it until I got hit in the head with the 2x4 of this currency war. And then if I wasn't paying attention, the internet explodes, MSNBC explodes. If you haven't noticed it now, right? I mean, you must be living under a rock somewhere, right? It's pretty noticeable. So then I start getting introduced to the concept of, I always knew nominal interest rates were low.
Yeah.
That I get. But then I start thinking about real interest rates. But everybody says, oh, the real interest rate on a 10-year bond is like, well, minus 1%. Well, no, it's not. I mean, it's only minus 1% if you buy into the notion that CPI is inflation. But if you actually start thinking in terms of inflation is a vector based upon what you want to acquire with the cash, then you realize the rate at which tech equity has been inflating is a lot faster than, like, what's the rate at which Apple stock has been going up? Is that at CPI? Right? Is that 10%? Is that 50%? So now if I look at asset inflation, I start thinking, at that point, the real yield on my cash.
Yeah, but there is a cap. But the bonds had a capital gains, as you pointed out before. So the net offset of bonds over the course of this year, bonds versus NASDAQ, it's been a pretty close run.
Yeah, you're right.
It's all doing well.
If you were smart enough, it's totally counter to my thinking. How could a person rationally lock up his company's capital for the next 30 years for 2% interest? See, if I'm the CEO and you said...
No, you invest it back in the business at the very least. If not, you're saying your business cannot generate a 2% ROI.
Okay, here's my problem is moral hazard. If I took $500 million and I put it into a 30-year bond yielding 2% interest, and if any rational economist took over the Fed, you would think the interest rate's going to go to 4% or 5%. Everybody knows that the economy cannot function with 0% interest forever, right? Interest rate is the value of time. We're in a war with time. We want to stop. Yeah. Will you give me everything that you own? Will you give it to me for the rest of your life if I return 1/3 of it to you when you're dead? Right? That's what 1% interest is, Raoul. Right?
Yeah.
Right? Give me everything you own. I will give you 1% of it back each year for the next 30 years. And when you're dead, you will get your heirs will get 30% of what you gave me now. Right? So here's the moral hazard. Or the dilemma for me as a CEO. If I invest the $500 million into 30-year T-bills at 2%, I'm taking the risk. I'm making the bet that no rational actor will ever fix the problem in the Fed, right? Yeah. I have to bet all my company's treasury that the world will stay irrationally priced forever.
I mean, it was the right bet for a Japanese CEO to have made.
It's like, by the way, if Ray Dalio says cash is trash, right? Like, I don't know if he says it. The trolls say he says it, but I'm going to wait for 30 years and see whether the government has inflated the cash, and then you're going to give me back the $500 million in 30 years. It's like, that doesn't make any sense, because I'm pretty much bet. I can't construct a rational argument whereby 30 years from now I will have made money on it. But here's what I would think. Any rational person would think that you lock up $500 million for 30 years at 2% interest. When the interest rate goes to 4%, your bonds are going to trade down by 30 or 40%, and you're going to lose the $200 million, right? So when I'm looking at it, I'm thinking, that's the craziest thing ever, right? I can't imagine that. So if you're a shorter term trader, I'm like, Okay, have at it. Buy the 30-year long bond index. But no one seems to be thinking they're going to hold it for 30 years. So, but I can't get that. So on one hand, I look at that as just massive hazard, moral hazard, craziness. And on the other hand, I look at all the equities. I'm like, well, I can't just buy individual equities. I mean, there's too much equity risk there. And then meantime, I just watch, I watch the talking heads. We get beat to death with this issue of real return. And I start to go to school on that. And I realize that you can calculate a real yield. If your real yield is take the asset inflation rate and subtract that from the nominal yield, then the conclusion you come to pretty quickly is that the real yield on cash this year is minus 30%, minus 25%, right? If you were holding the cash. If you were holding a 30-year bond, you broke even, or maybe you're okay. But I'm not. If you're holding a 2, 3, 4-year instrument, the real yield is obscenely bad. It's minus 10, 20, 15, 20, 30%. It depends upon how you see that. The real yield on anything I was holding is bad. Now the question is, how do I get a positive yield? Like I use this phrase. I said, I come to the horrifying conclusion that I'm sitting on a $500 million ice cube that's melting. It's melting at 6% in a good year. And for the last decade, it's been melting at 6%. Okay, I was there, but I could ignore it. In good times, you ignore the 6%. But then when you have to actually get educated on macroeconomics, you realize it's been melting at 6%. And then you realize that this year it's melting 25%. And then you have to look out over the next 3 years and ask the question, is it going to continue to melt at 20% a year for the next 3 years? Is it going to melt at 15% or 10%?
Right, if you think of it in your terms, because basically part of your construct is that opportunity cost is your negative yield, essentially, right? Now, let's say you're a corporate treasurer and you've got 500 million, or the CEO, you've got $500 million. As you said, you could choose to make an acquisition. Well, guess what? It's 40% more expensive now in the sector that you want to acquire. So as you say, your opportunity cost has been incredibly expensive by sitting in cash. So to offset that, which I guess is what your mentality is, you need an asset that can offset that opportunity cost without overpaying for the asset.
Raoul, and you say a wise thing that an investor gets. I was CEO. I didn't get it. I didn't get some things until I got it. Okay, until this year. I would go to my investors and I said, well, we got a great company. We got 500 million, 600 million in cash, a great bulletproof balance sheet. And they looked at me like we're not going to value the cash. Like they didn't value my cash. They thought it was like worth nothing. And, I kind of took offense to that. Like they don't get it. Like the cash means that we're indestructible. We're going to live forever and we can do the right thing by our employees, our shareholders, and by our customers, right? And why is it I'm being punished for being virtuous, for saving my money, and for being responsible and conservative? Right? And I was kind of, angry, not angry, irritated a little bit, like they don't get it. And then I realized they kind of do get it. They had a different perspective. I just didn't understand what they were trying to tell me. And their perspective is, there's no rational investor that would raise $1 billion and say, my plan is to put it in cash and wait, right? You can't go raise that money. So their perspective was assets are inflating at 6% or 7% a year in a good year. If I'm not beating 7%, I can't stay in this business. So that takes you to this notion that the asset inflation rate is actually just the cost of capital. Okay? And bingo, your cost of capital, if you're the CEO of a publicly traded company in a good year, in a normal year is 6% or 7%. You better actually generate more than 7% with it, or you got to give it back to the shareholders. Down to the razor thin margin. Now, there's a certain elegance to that. Why didn't we actually do that? Well, it used to be we're thinking, I've got a bunch of capital. We were buying our stock back. at a measured rate, and we were very thinly traded. So if I bought 20% of the stock back in the windows without moving the market, it takes me like 7 years. It takes me some number of years to buy it all back. It's very frustrating. And and I can't go any faster than that, without doing a tender offer or the like. So we're doing a bit of that, and then along comes the pandemic, and everybody gets kicked into high gear, and the P&L gets kicked into high gear, and we're transforming. And then this macroeconomic change takes place, and the cost of capital now, Raoul, it's not 6% anymore. The cost of capital just spiked. And so the fascinating thing here is if you're a corporate treasurer, your cost of capital was 6%. This year, your cost of capital is 25%. And then all the assets that you could buy go through the roof. And now this is a problem. Like, do I go buy a company? 90% likely I burn the business. I destroy if I buy a bad acquisition, then I probably make a mistake. That's a peril. Do I go buy the S&P 500 after it spiked up today? The most crowded trade, right? They're saying the most crowded trade is
well, also the future expected returns are basically negative by most people's assessment for the next 10 years. So you're basically locking into a loss.
It could very well be a lost decade for equities. So, but I watched television for the past 4 months, and it's amazing to me that the equity commentators manage to find something positive to say every single day, every single day. It's amazing. So yeah, that doesn't really work for me. So my cost of capital spikes. I get sensitized to the issue. We start thinking we got to do something. Okay, so now you put yourself in my situation. You have $500 million in cash. Cost of capital went through the roof, and every central banker wants to print more money. And every intelligent investor is telling you that cash is trash. What would you do if you're me?
I came to the same conclusion you did. I mean, it's basically you need to look for an asset that's going to protect you in a number of scenarios, that has a high expected upside, that beats the cost of capital. And so that's the only thing I can think of. And so to me, it came down to gold and Bitcoin.
So we tick through these. So what can I buy? I'm not going to buy an individual equity. I'm not going to buy another company. Can I buy a portfolio of commercial real estate? Oops, half commercial real estate's impaired. The other half is overinflated. And who's going to sell me $500 million worth of commercial real estate at a fair price that's not impaired this year? Right? That's not going to work. So now I'm down to, can I buy an index of stocks?
Well, anything you want to buy company-wise that's cheap is basically insolvent and comes with a bunch of debts. Anything that doesn't come with a bunch of debts is crazy, ludicrously expensive.
Okay, you're right. I get it. And so mark that off the list. So now I what have I got? Precious metals and Bitcoin. So I look at two things that I completely dismissed, was oblivious to my entire life, Raoul. Right? And so all of a sudden you get hit in the head with a 2x4 and you cross off your list. Every door is shut to you, but these two other random doors. And so you got to open up the doors and start to look. And so now I go down the rabbit hole and I start studying. And, you can learn anything on the internet. So all of a sudden you get discovered by me. Pomp gets discovered by me. I have this friend, Eric Weiss, who's runs a crypto hedge fund. And a couple of years ago, he told me about Bitcoin. I thought, well, that's crazy. I kind of dismissed it out of hand. Well, I mean, couldn't someone else create a Bitcoin cryptocurrency and then all the money will drain away? And maybe, how do you know it's going to work? And so I just don't even look at it. Don't even think about it, And when all the other doors shut, this one opens. And now I have a problem, right? If someone took $500 million out of your bank, put it in your backyard, opened the back gate, and then every month someone came in and they burned 2% of your money, It's like you go from thinking your money is safe to having extreme anxiety. Extreme. So now I got a problem to solve. I first had to solve the P&L problem. Now we switch to the balance sheet. And so what do? Well, take this off. First I go and I study the stuff, and I get to introduce the stock to flow, right? And all of a sudden I'm looking at plan B, and what is stock to flow? Okay, 2%. 2% of the gold supply gets inflated every year. And then I start doing the math, and then I start thinking about it. I'm thinking, well, 2% minus, whatever, it's better. And then I start looking at crypto, and I look at Bitcoin, and then I realize and then I start with all the concerns about Bitcoin, right? What if it gets forked, right? I mean, there's nothing more anxiety inducing than when someone puts 8 pages in front of you of what happens to your crypto if it gets a hard fork or a soft fork and you're studying it. So I started studying it, but then I realized, here's what I realized in short order. Bitcoin's a $200 billion asset. Bitcoin is a hive of cybernetic hornets doing the bidding of Mother Nature, protected by a wall of encrypted energy, right? That's what I saw once I started to dig it. It's a living cybernetic hive creature with a wall of encrypted energy, and Lord help the guy that tries to shove his hand into that hornet's nest and steal from it, right? And I thought that's interesting. And then I studied Ethereum. That's the number 2. And then I realized Ethereum is something totally different, a world computer, and they're still chasing after functionality. All sorts of functionality, and like, more power to them. Decentralized finance, it's interesting, it's experimental. It
might be something that MicroStrategies build something on in the future for Ethereum.
Yeah, I mean, I guess what I'd say is I saw all that stuff, but there's still a question of will it work? It has to be proven, and there are centralized competitors to it, and they're not done with the functional architecture. I mean, if you understand proof of work, then when the founder says, well, we think we're going to switch it to proof of stake because we don't think proof of work will work for us, then you realize there's a fundamental dogmatic set of assumptions, and there's an existential debate going on there. Sure, fast forward to the conclusion, which is, if you look at all the proof of work crypto networks, Bitcoin is 92% of them all. The next competitor is 2%. The next competitor is 1.5%. The next competitor is less than 1%. It's the market screaming to you that there's a winner, right? So when everybody says, well, there might be another one. No, there wouldn't be. Well, this might be the MySpace. Well, no, if you knew anything about the history of MySpace, you would know that MySpace flamed out at $1 billion. It flamed out when it was less than 1% of what Bitcoin was. Bitcoin was never MySpace. Bitcoin is the Facebook of closed digital monetary networks. And it's already crushed everything, and it's software eating the world, right? Software eating money, and it's only going to get more powerful. So now we're back to my issue. I know I got to buy hard assets. It's a question of silver, gold, Bitcoin. And now I start thinking about it, and here's what I'm thinking, Raoul. It's like, I think everybody's too short-term on this stuff. You want to really understand it, step back from the noise, look at the big picture. How does this feel across time and space? I'm going to take $100 million and I'm going to give it to my successor in 100 years. Okay, you want to send something to your grandchildren or your great-grandchildren. If you want to endow anything of value, a park, a company, an institution, a foundation, a family, a whatever a religion, a political system, I don't care what it is. If you believe in it and you want it to be here 100 years from now, you got some money. How are you going to convey the $100 million across 100 years without losing it? Would you invest it in Apple stock? Apple might not be around. Would you invest it in dollars?
Traditionally, real estate's been that answer, but even that's risky.
Okay, so you want to buy $100 million of real estate in California?
Yeah, no.
Okay, do you know what the property tax rate is in Florida?
That's true. I forget about US property taxes.
Okay, I know. It's 2%. If you take $100 million and you buy Florida real estate, it's $2 million a year. And by the way, it gets appraised up every year, which means that over 30 years, you'll lose it all. The property tax rate on anything in the real world is going to drain it from you. You can't buy real estate. If you look at all assets you can buy, you buy a stock, you buy an equity. You've got a property tax, you've got an income tax. You've got employee payroll taxes. You've got regulation, you've got customs, you've got trade, you've got tariff. Now I'm going to come back to you with a question. How are you going to convey your family's wealth across the generations for 100 years? And if you're not, I'll just stop right there. How are you going to do it? You tell me.
Well, the only thing is, and gold is not easy because where do you store it and how do you pass that along?
Okay, so let me stop you there and tell me I'm going to tell you what the problem is with gold. I thought about it. Take your $100 million and put it in gold in a vault. Gold miners are going to print 2% more every year. Okay, if gold miners if you own the entire supply of gold in the world, and if it was pure, right, for London delivery, gold bars, and it isn't, right? But if it was, and if you were sure you owned it all, if gold miners create 2% more every year, the rule of 70 says every 35 years the gold supply doubles, which means that you would own half the gold supply in 35 years, a quarter of the gold supply in another 35 years, and in 100 years, you're going to own about 15%, maybe even 12% of the gold supply.
So here, you'll like this. So I was thinking through something similar in a different way. I just wanted to look at the Fed balance sheet growth over the last whatever period I wanted to choose. And I looked at every asset against it. The Fed balance sheet outperformed everything, outperformed gold by 50%. So gold's done a bloody lousy job. It's better than many things. There's only one asset that did it. And it killed it, was Bitcoin.
Okay, and by the way, and I know why now, and I'll tell you why I think it is in a second. I thought I was going to buy gold, and a very smart guy that works for me, my consigliere, he said, Mike, I remember, gold back in the 70s and the 80s was $600, and then it traded down, and it's gone nowhere for a decade. And I'm like, everybody says gold's the ultimate hard money. What's the problem? What am I missing in this picture? And then here's what I realized. Gold's got an inflation rate of 2%. Over time, that means $100 million is going to be worth $12.5 million at 2%. You're going to lose 85% or 87% of your wealth if it inflates at 2%. But it's worse than that because gold's not pure. Half the gold supply is floating around, right? It's not all stamped good delivery bars in London. Yeah, that's the second problem. The third problem is if gold price goes up, every miner is your enemy. They're going to print more. They're going to mine more gold. They're going to ship more gold. They're going to capital invest in more gold. This is the dilemma of every commodity business. And I used to work for commodities at DuPont. The dilemma is if the price of the commodity, or let's go back to oil, fracking. We fought wars over oil, Raoul. We went and fought wars over oil to protect our oil. What happened when the price of oil went to $100 a barrel? Fracking. We invented a new technology and by the way, what happened? The U.S. produced so much oil, it became a world crisis. We doubled, we produced 5 million barrels of oil a day, and now we produce 10 million barrels of oil a day, and then 11 and 12. And everybody was like, hold it, you're going to produce too much oil. Okay, and then you realize OPEC, the secret to making money in oil is a cartel. John D. Rockefeller understood it, a cartel. Anything that humans can produce with their brains and with capital is going to get overproduced. And that's the problem with using a commodity as a money, because ultimately if gold is successful, then intelligent people are going to produce more gold, and you're going to double, triple, quadruple the supply of it.
Anything with a supernormal return gets arbitraged away. So those returns are only available for a period of time. Everybody gets into the game. The margins collapse. I mean, it's everywhere. I mean, that's capitalism.
And so people that think they're buying hard gold, the problem, by the way, we could have another cast. I could talk with you for 2 hours about the technical problems with gold, but I don't want to get derailed by that. I want to basically start with a simple premise. If I look at Bitcoin, there's a lot of people in the Bitcoin community that talk about stock to flow and how it's going down, and I appreciate it, and I think that's a good contribution. But I have a different take on that as a public company CEO, which is this: every time I print my share count, there's only one number that matters. I print fully diluted share count. No one ever asked me, well, how many shares do you have this minute? Nobody ever asked me how many shares are going to vest with employees next month or next year. They just asked me one question: what's your fully diluted share count? We take your earnings, we divide by that, we're done. Take your revenue, divide by that, we're done. The fully diluted Bitcoin count is 21 million. Done. The fact that it's going to trickle out or whatever, I don't care. Fully diluted Bitcoin count 21 million. Instead of saying stock to flow is higher, no, stock to flow is exponentially going to infinity. Stock to flow is infinite, which means it's infinitely hard, because a rational actor, and I consider myself a rational actor, I didn't buy Bitcoin expecting I was buying, this much Bitcoin divided by 18,500,000. I bought the Bitcoin thinking I was buying that share of 21 million, and I knew that, and so now we're back to this a simple thing. You take your $100 million and you hold it for a year in fiat currency, you're going to have 1% or 0.5% of it left. You're going to lose 99% of your money in 100 years. By the way, Rob, I know that to be the case. I have a house in Florida, a nice house in Florida. It would cost you $15 million to buy that house, $20 million today. I have the sale deed for that house in 1930. You know what the number is on it? $100,000. $100,000 in 1930. Count the number of years between 1930 and the year 2020 and figure out what the depreciation rate was on fiat currency in the US dollar. You're going to lose 99% of your money if you put it in cash. Okay, so we all agree on that. Okay, this is the thing that people don't say. You're going to lose, for sure, 85% of your money if you put it in gold. You're going to, for sure. By the way, and that you're assuming that nobody invents a better chemistry for gold. We don't find gold anywhere else. Nobody invests any more money in gold mining. Nobody gets any smarter, and the gold price doesn't go up too much. And if all those things are true and people still use gold, you're going to lose 85% of your money. But if human ingenuity kicks in, gold's a commodity, you're going to lose 90% of your money in gold. Now, if you put your money in Bitcoin, you're keeping it all. You're not losing anything. If you don't believe in fully diluted Bitcoin count, you have a 15% loss in 100 years. But if you do believe in it, there's no loss. Now let me give you another analogy. You want to cross the Atlantic. If you cross the Atlantic in a vessel made of fiat currency, it's like stitching together a bunch of inflatable rafts. By the way, you're crossing the Atlantic in an inflatable boat with a leak in it. Or you want to cross the Atlantic in a gold vessel, you're crossing the Atlantic in a wooden ship. It's sort of good, but it's rotting, It's a wooden ship. It's better than inflatable. It doesn't have a leak in it, but it's wood, and it's going to decay. It's decaying 2-3% a year. You're crossing the Atlantic in Bitcoin. It's a steel hull freighter. The thing about steel, like I say to the guys, I say, well, why do I want a steel boat? They go, well, because steel is indestructible and the welds are harder than the original steel. If you put a hole in steel and you weld it, the weld is stronger than the original material. Steel will last as long as you maintain it, will last forever. Okay, so rubber boat, wooden boat, steel vessel. And now here's an epiphany, right? I mean, if that's not enough, right? I mean, like, there's no comparison between losing 80 to 90% of your money versus not losing any of your money. There's no comparison. But here's another epiphany. I'm an aeronautical engineer from MIT. I studied spaceship design. I studied aircraft design. I studied building design. You know, the entire science of civil engineering requires one element. Do you know what the element is? Steel. Think about it for a second. I build a building with wood. You can build a 2-story building. You ever see a 5-story wooden building? I built, that's fiat. I build a building of stone, and masonry. Look at all of Europe, all of beautiful Europe. Every building in Europe, 5 stories, 6 stories. That's as far as you go, with brick. What happens when I invent steel? I build a 50-story building. You think steel is twice as good as bricks? Yeah, you could build a 100-story building, right? Steel is elemental to or instrumental to New York City. There is no New York City without steel. There is no skyscraper. There's no science of civil engineering until you invent steel. Right? You could say iron, maybe, if you want, but without the element of steel, there's no civil engineering. Now flip to aerospace. You ever see a plane made of steel? No, they don't fly. Steel is the perfect element, except for the fact it's too heavy to fly. That's why we use aluminum. No aluminum, no airplanes, no industry, nothing. Take away aluminum, the entire aviation industry goes to zero, right? Andrew Mellon made his money on aluminum. Andrew Carnegie made his money on steel, right? These are fundamental things. These were technologists. The entire industry is based on it. Now, the gold standard, good idea in the 19th century, right? The best idea you could have in the 19th century. But, I mean, just like wooden ships, pretty good idea to have wooden ships if you're the British Empire, if that's the best you can have, Now, along comes Bitcoin, cryptocurrency. It's when I say it's harder than gold, I mean it's not just 10 times harder because it goes 100 years without losing any of its value. I say it's harder because it's an organic nest of cybernetic hornets feeding off of encrypted energy. It's a living thing, which means that the miners are going to keep upgrading their equipment. The developers are going to keep upgrading their development. The nodes are going to change. Everybody in the ecosystem is going to change. And they're changing in this terrifying Darwinian, capitalistic, libertarian, aggressive, winner take all, hold no bars, no one companies holding like I've been CEO. I thought I was right. I was wrong. You could be the most brilliant CEO in the world. Anything that's controlled by a CEO is crippled. Controlled by a state is crippled. Controlled by a country, it's crippled. This entire thing is its own ecosystem. Gold is not going to get 1,000,000 times smarter in the next 10 years. It's not thinking at all. It's a lump of metal lying there, right? Nicholas Taleb wrote Anti-Fragile. And I think Taleb is brilliant. I love all of his books, read every one of them twice, right? Bitcoin is an anti-fragile, evolving thing. It's hardest currency because it's getting continually exponentially harder. It's getting harder. But it's also smarter, stronger, and faster than gold, right? It's smarter because I can create a computer program. I can put it on a machine behind that bar, and I can have it make 1,000,000 trades with your crypto every night while you're sleeping and move it around, right? But I can't do it with gold. If I want to move $100 million of gold, I got to put it on a jet, fly it around the world. It's $250,000 to physically deliver $100 million worth of gold. I can physically deliver $100 million worth of Bitcoin in $5, right? $5 in 30 minutes, depending upon how risk averse you are. But if I want to move it, I can put a piece of software on it. By the way, Raoul, when I move $100 million into a crypto exchange to buy crypto, I got to talk to like 3 bankers on the phone, and they're asking me for my birthday, Raoul. You can go on Google and you can Google Michael Saylor, and do you know what you don't even have to click. Do you know what Google puts underneath the Google for my
birthday?
My birthday. So the banking system is running about 1 million times slower and less secure to move this stuff around. When I put this elemental energy into Bitcoin, it's smart because it's getting smart as fast as the smartest crypto bank can program something intelligent. And I am in awe of how many of these things are going on so fast. DeFi and CeFi, right? It's not clear to me whether you're going to use DeFi or CeFi. It doesn't matter. Whatever is going to work is going to work.
It's all happening, yeah.
It's faster because it's dematerialized gold. I look at all my employees and I say, we're in the virtual wave, guys. You can now move at the speed of light and bend time and space. What are you going to do with it? Right? If I can actually take your $100 million worth of gold, dematerialize it, chop it into 10 million pieces, and move it around the world 100 times a second, something new is going to happen. And then it's stronger. It's stronger because you can liquidate $100 million worth of Bitcoin on a Saturday afternoon in a foreign country, in a foreign currency. And, you can do this, and maybe you might take a 3% haircut. You might like, holy crap, it's volatile. It moved down $300. Well, 3% haircut to liquidate $100 million of gold on a Saturday afternoon. Try doing that in Istanbul. Try liquidating $100 million sitting in a vault in New York City, in Tokyo on an afternoon on a weekend, right? So the issue is gold's going to be audited once every, by the way, I apologize for digressing, but you can't make this stuff up. It's really hilarious. When I borrow $100 million from a conventional bank, you know how they verify my collateral? They ask me to have my accountant prepare a financial statement as of the end of last fiscal year. And so I actually deliver a statement that has all of my assets on it. And if I'm borrowing money on June 30th, I'm giving you a January 1st financial statement. And I'm asserting that I have not double pledged the collateral or committed bank fraud. And my accountant is asserting it. And that's a pretty serious thing. But I'm saying it tongue in cheek, right?
Yeah, now, it's ridiculous.
Why do people care about publicly traded companies? Well, a public company has more credibility than a private company, and has a lot more credibility than a private individual. And here's one reason why. I and my CFO sign Sarbanes-Oxley statements, financial reports, and every quarter I sign my financial report. If I lie to you, Raoul, it's a crime, right? I go to jail, right? If a public company officer misrepresents the state of the balance sheet, the state of the business, you ask me, how's the future of the business? I'm going to equivocate. I think the future of the business will be the future of the business, and we're just really excited about working on the future of the business. It's because it's a crime for me to mislead. Okay, so the way that we actually certify collateral is via regulations and criminal statutes, and that's why the most credible entities in the world are American publicly traded companies. Right? Because everybody knows that if you trade on the NASDAQ or the New York Stock Exchange and you're a CEO or a CFO of an American, if I heard a guy that worked for 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 me in a foreign country was actually doing something sloppy, I'm thinking, well, Foreign Corrupt Practices Act makes me criminally liable for that, and that person gets his head chopped off. Okay? So that's the way that you actually pledge collateral normally. With Bitcoin, we've totally turned on its head. Anybody can inspect the fact that I own the Bitcoin in 1 second.
Yeah.
And every 10 minutes, you could take a complete audit of everything.
That's right. I mean, I wrote that article about it being the world's most pristine collateral. I mean, it's perfect for the foundation stone of everything. As you were talking about, it's the steel of an entire new financial system is this.
I think what you've said is brilliant, but I don't think it's understood. When you say it's the world's best collateral, the world is operating on gold as collateral. It gets audited every 7 years or every 3 years. It might be there. It's impossible to move. It's impossible to
also because of rehypothecation and the reuse of assets, right? It's not clear. Bitcoin ownership is guaranteed. So it's so pristine. The only thing we haven't got is a yield curve. So yes, you've got it implicitly in the fact that it's got a limited supply, but eventually there will be a market for you to lend out your Bitcoin, and it's going to trade at a premium to bonds, US bonds, because it's like you lending out a piece of art. Well, fuck it. If somebody's going to borrow you a piece of art, they're going to pay you for it.
I totally agree. And I think the yield curve is coming. And when I look at the forward contracts, it's very fascinating to me. But the summary of my entire meandering analysis is Bitcoin, if it's not 100 times better than gold, it's 1,000,000 times better than gold. And there's nothing close to it. And most people, they're focused upon stock to flow is better. And what they haven't factored in is that the smarter, faster, stronger makes it 1,000,000 times better. And it's steel to masonry for the firmament of the 21st century financial ecosystem.
Love that analogy. So here's another question for you. So you make the brave decision to do this. It doesn't seem brave to you because it feels like the most intelligent, rational decision you can make, right? But to everybody else, oh my God, what's he doing? So you go to your CFO and go, okay, I've got Bitcoin. Currently it's marked as an intangible. We don't get any appreciation of the value of it. And GAAP accounting doesn't work. How the hell did you get through all that shit to put it on the balance sheet and
so
not to be marked where you bought it all time?
So now we shift to the subject of how do you build consensus in an institution or a publicly traded company?
Yeah.
Because it's one thing for me to believe it, but there's a lot of other fiduciaries and they have to understand it and they have to assess all the risks. So what happened next is I started cheerfully assigning homework to all the officers and all the directors of the company, right? And you can imagine some of your podcasts got linked to them. A lot of Pomp's podcasts got sent to them. Eric Voorhees' famous epic debate with Peter Schiff over the future of fiat versus Bitcoin as the world's best currency got sent to them.
Bitcoin standard?
The Bitcoin standard. Lynn Alden's paper on 3 reasons I'm now bullish on Bitcoin got sent to them, right? Andreas Antonopoulos's, what is Bitcoin got sent to them. Lots of compulsory YouTube watching. Guys, I'm going to need you to watch these things on YouTube. Then I'm going to need you to read this. Then lots of individual meetings. Meet everybody. I'm going to meet, I'm lucky. I've got a very intelligent board. I've got a very engaged board. I've got a very intelligent, I met with my general counsel. And I was worried, like general counsel is going to tell you 1,000,000 reasons you can't do something. I said, well, I think we should be thinking about Bitcoin and this and this and this and this and this and this, and I waited for him to tell me, no way in heck can we ever do this ever. And he goes, yeah, that's a very interesting thesis. I bought Bitcoin 2 years ago.
Love it.
I was like, but so it turns out that, I talked with my board, and it turns out that half of them had already invested in Bitcoin personally. So we went through this round of study it, think about it, evaluate all the options, meet as a group, break. After that, the CFO went off and he met with our auditors and our outside auditors and more auditors. And the NRGC met with attorneys and more attorneys and more attorneys and our outside attorney. And then we started sifting through all of the regulatory filings of everybody. I went down the rabbit hole. They went down the rabbit hole. And the board went down a rabbit hole. We all came together, and I'm really proud of the team. But at the same time, I think it's important to say that rational people, if this is put on the table and if they're given enough time and the right resources, they all unanimously come to the same conclusion that I come to, right? No dispute, no dissent. Everybody's got to be part of the process, and you got to give everybody time to absorb it, and you got to do your due diligence.
How do you get the auditors across the line? So you read internal consensus, fine, okay. Now you've got to have the bloody auditors agree that you can do this.
Okay, well, the auditors give you the feedback on how you're going to account for it.
Yeah.
And that's their position, and they're good at telling you how to do that, right? And so we take their advice, and at some point we talk to lots of different auditors. And I do think that that we're leading the way here.
Clearly.
In fact, it's news that we did this. It'll be news when we put out our 10Qs. And if you want to see exactly how it gets accounted for, people will be looking at the 10Qs to figure out what does that do to the balance sheet and the P&L. And
that's right.
But let me make one point, Raoul, which is you can run your business in order to make your GAAP accounting beautiful. If you did that, you would never issue a stock option. And if you look at every successful tech company, they have stock option expenses, and every screaming success, Facebook comes public and there's huge amounts of stock options that they've issued, and they take non-cash charges for them. So the result is most public companies have pro forma results, and they have after adjustments. There are mega adjustments based on currency fluctuations and all sorts of non-cash and tangible things. And the investment community looks at those, and generally they focus more on the as adjusted, pro formas.
Yeah, as long as you explain what it is, then people don't care.
Because GAAP doesn't necessarily keep up with the reality of the business. No. Like, for example, if I told you, would you buy a company that's going to go up in value by a factor of 10 if it printed a GAAP loss, or would you not?
And also the other thing is you told me before that the investors valued your cash at zero. So what the hell you got to lose? If you say, well, it's a non-zero asset now, and whether it's not included in your GAAP accounting, it's like, well, you wrote it off to zero anyway. So now you can either value it as an option or not.
Yeah, let's say if we buy Bitcoin and it gets valued as an intangible, and then we're forced to write it down based upon the volatility. It could happen. We could buy a bunch of Bitcoin. It could be written down by 50%. Then you have a GAAP write down, and intangibly it carries an intangible on your balance sheet. On the other hand, if the value of Bitcoin doubles, if you have $1 billion of Bitcoin, right, and the GAAP accounting says you're only showing 200 million, the investors are going to look at that. They're rational. Yeah, I mean, they're right. By the way, the investors are rational, and they normally will understand that you have $1 billion worth of something, even though GAAP accounting doesn't let you market as $1 billion. But if the market is irrational over the long term, you sell some of the Bitcoin, buy all your stock back, right? In fact, in the extreme, if you have 10 billion,
if your net asset value is worth more than the value of the company outstanding, you buy your shares, you buy the company.
At the end of the day, if the Bitcoin's worth 10 billion and then the accounting says it's worth zero, and if the investors insist upon looking at the zero accounting and they value you at nothing, you buy every single share of the stock back, and you got a private company with $9 billion worth of Bitcoin in it, right? But there's a point to what I'm saying, which is you can't run a business in order to make the GAAP accounting optically look perfect. If you did that, you wouldn't be in any business that outstrips the rate of accountants that have a 30-year lag.
Yeah, and also just the point being is you have a reputation, the firm's been in existence for a long time. As long as you can explain to people what you're doing, nobody cares. They either like it or they don't. That's what shareholding is. And that's okay.
I think we have an obligation to be as clear and articulate and respectful to our shareholders as we possibly can be. And if you look at what we've done over the past 3 months, we have tried to be extraordinarily transparent and methodic. First we say we think we've got a treasury issue, and we need to either buy our shares back or invest our shares. We need to buy our shares back or invest our treasury. Then we said we've done the analysis, and we're going to do a $250 million tender, and we're going to do $250 million investment, or we've done it in Bitcoin. Then we let the investors decide what they want to do. That's their choice, right? And then the investors decide to tender some of their shares, and we buy some of those shares, and we have some extra cash. Then we take the extra cash, and then we tell the market, it looks like we have some extra cash. By the way, our treasury policy is to invest in Bitcoin. Then we invest in Bitcoin, right? And if anybody's holding the stock, right, it's just very important for them that they understand what's going on. And I can't tell you how to think about this, right? But by the way, it's like, you would hear rumors like, oh, I don't think an investor will like it. So we met with all the investors. It's like 80% of investors go, yeah, that's kind of a good idea. That's kind of interesting, right? Right. And then they go to me, well, this one investor, he was kind of concerned about it, and he had a problem with it. I met with him. He goes, well, why don't you just buy back all the stock? And I said, well, the issue is we would decapitalize the company. If we buy back all the stock, we'll have no treasury assets. And if we have no treasury assets, no capital, then that puts our customers at risk. And so, I have to be able to, my customers are governments, banks, big organizations. I need to be able to represent to them that for the next 30 years, they can count on me. So I can't drain the entire assets of the company, even though, and that's the problem with just buying, with draining a treasury. I have to have a treasury balance. And so then I proceeded to explain the Bitcoin thesis to him. He cuts me off halfway through and he goes, oh yeah, I get it. I own Bitcoin. Okay, so the point is, this is an example of somewhere everybody's really afraid. Everybody says, oh, that's a really ballsy, risky,
But they're all long themselves.
They're all long Bitcoin.
It's the same in the hedge fund world. Paul Tudor Jones goes, you're the Paul Tudor Jones of the corporate world. Paul was the first guy to stand up and go, well, I bought Bitcoin in my fund. Well, guess what? Every bloody fund manager I know owns some Bitcoin already. And,
not to beat up on Paul Tudor Jones if he's listening, but Paul, if you believe in it, buying 1%, but 1% is like, I go to Vegas and I'm the rich guy that goes to Vegas with my friends, and I want to convince them I'm cool. And I go, yeah, I really get gambling. I really believe in gambling. So I take out $100,000. I put it on a table. I pay blackjack for a few hours, and I impress my friends that I'm really cool. That's one view. On the other hand, if you're really a baller, you're Howard Hughes. He went to Vegas. Howard Hughes bought Vegas. Right? If you really believe in gambling, if you get gambling, you don't gamble $100,000 or 1% of your wealth in Vegas.
Yeah, but
you buy the casino.
Yeah, but Paul doesn't care. He's rich enough. So for him, and again, whatever he says and does are two different things. I know him very well from the past, and Paul can move his positions on a dime. We've seen him be, 3 or 4 times levered, the guy knows what he's doing. So even if he says 1%, that was that snapshot of that afternoon that he finished that note. It could be anything.
Okay. And I notice the hedge fund guys, they either say the opposite of what they're doing, or they say, or they talk their book, and it's amusing to do that. But I mean, to state what I think is pretty obvious, once you understand Bitcoin, right? You have anxiety about being short, once you understand it.
Completely terrified of not having enough.
And if that's the case, then if you're running $10 billion of money, you go take $1 or $2 billion of it, or $3, or you just buy it all. Like, I mean, don't you sit around? I sit around, I'm trading this Bitcoin, Raoul, and to buy this much, you can't buy it in a minute or an hour. You can't even buy it in a day. When I'm in the market, I'm buying Bitcoin 4 days in a row, every minute.
Are you doing it yourself?
Well,
you haven't given it to anybody else.
I control it all. But take, if it's worth doing, do it yourself.
So I want to ask you two questions.
Yeah.
2 questions. The practicalities, right? So there is the terrifying moment when you transfer your Bitcoin from the exchange to your hard wallet. And you're like, fuck, I hope I put in the right numbers, because there is nobody I can call up at the bank and say, oh, I made a mistake in the transfer. Did you not get the terror of doing that? And how do you store it?
Okay. Well, so a couple of points I'll make. One point is, I can't give you too much details about how we do it and how we handle our crypto, just for security reasons.
Obviously.
Right? I mean, in private, off the record, we talk about it, but in public, I can't. Generally, our approach is to work with institutional grade crypto exchanges and institutional grade crypto custodians, and then, like handling nitroglycerin, handle it very carefully, right? I handle my crypto very carefully. And that means that before we're whitelisting everything every which way, and I'm moving 0.01 Bitcoin before I move anything material, right? And the first time it took me like 60 minutes or 90 minutes to get it confirmed, man. I was like, I'm working on it. But let me make the next point, which is, if you want to trade this stuff, you need a great team of like over-the-counter brokers you work with, and they have to have great technology, because you're going to buy this thing in 89,000 small bites of 0.2 Bitcoin each. If I'm in the market, you don't know I'm in the market, right? Like I get a laugh when I watch people come in and hammer the price up by $100, and people are thinking, is that some whale? Is that well, if you wanted to buy $100 million of it, there's no way you're chasing it up $100. So I'm waiting for someone to panic, at which point I'm going to buy $10 million in 1 minute, why they think they're getting the better of me, right? That's the way you're going to do that. And then my last point is, while I'm sitting there for all those days and I'm trading this stuff, and I'm like day and night, right? Day and night trading it. Everybody thinks, well, Bitcoin's too volatile. When people like me or these other institutions get into it, we've got computer programs that are trying to buy it every minute of the day, day and night. And pretty soon, there'll be one set of computer programs talking to another set of computer programs.
Volatility comes
There's
down.
no people involved, right? There's no people involved, and the volatility is collapsing, right? It's already collapsing. Anybody that's watched this stuff over the past 3 months, you would see the volatility is coming in. The other day, I'm watching it. Bitcoin's less volatile than Apple. It's definitely less volatile than Amazon, less volatile than all the big tech companies. That's the story. My last point, it's like, who are these people that are selling it to me? Like, I can't believe someone is willing to sell it to me. But I'm thanking my lucky stars. I'm like, hit me again, hit me again, hit me again, right? And I see these guys on crypto Twitter, and they're like, yeah, Saylor's going to buy it, then he's going to dump it. Or he's going to buy it, he's going to like buy another company with it. Or he's going to buy it until he gets like this profit, and he's going to do whatever. I'm like, they don't really, there's a lot of traders in the market. They don't understand the mindset of longs. Like, I'm buying it for the dude that's going to work for the dude that's going to get hired by the guy that takes over my job in 100 years. I'm not selling it. Right? When it goes up by a factor of 100, I might be borrowing a little to go buy something that I want. But this is, what am I going to buy with it? Right? That's better than what I'm buying. Right? Every other treasury asset, and I count $250 trillion worth of stuff. This is not about gold, right? Gold, fixed income, sovereign debt, cash equivalents. Every other treasury asset's got a negative real yield. What am I going to buy with it? No, there's no other asset to buy with it.
And that's why I got into the irresponsibly long thing. In the end, I just looked at everything and said, right, fine, you can trade around, do stuff. But if there's anything you actually want to put a real position in for an extended period of time, there is only one thing I can really see. You know, I've got gold in a storage vault, and I'm like, I can't see the point. And you're tipping me over the edge of saying, I can't see the point. I like gold, I have no problem with it. You know, I'm not going to hold it for 100 years, so I don't really care. But I kind of like Bitcoin's going to swallow the world.
If I told you gold has a minus, it's got a minus 3% real yield.
Yeah, but you know, I don't mind because I'm likely only to hold gold for 3 years. I'm not, you know, Bitcoin's different for me, but gold for 3 years through this particular transition phase. So maybe it goes up 100% and I lose 10% in negative real yield. That's okay to me. Yeah, in that time horizon.
I think that, and this is where time horizon matters so much. If your time horizon is 12 months, and you're a hedge fund guy, you're like looking at like the volatility curve wave, right? You guys are trading gamma and stuff like that, which like I got degrees from MIT and I can't figure out gamma yet. So I need a speech on that. But you're living in the world of like minutes to days to weeks to months to years. Let's say when you go out more than a decade, if you go out more than a decade, all this stuff, all the noise drops away. Everything gets really clear.
Totally agree. Totally.
Right?
Agree.
And when you come in less than 5 years, there's a lot of different options you got to consider. So the real question is, what's your time horizon here?
Yeah, 100% agree. And, you know, and that's exactly what the conclusion. But for me, why I'm so interested now of all time, you know, really intensely focused, is across almost every single time horizon, it now looks superior. That won't always be the case. There'll be a time when, whether it's technology stocks or whatever it is, will outperform Bitcoin. But when I look at almost every time horizon, you know, going from a month, that would be the shortest I'd look at, a month out to 100 years, Bitcoin looks like it's going to beat everything for the time being. Great. That's a home run opportunity.
So, Raoul, that makes the decision easy.
Yeah. I need to sell my gold.
And that's why I think if you're really a hedge fund person and you really get Bitcoin and the decision's so easy, are you really going to tell me you've decided to take 1% and take and hedge and try it? Like, if anybody really gets Bitcoin, there's nobody investing 1% of their portfolio in it. No,
exactly.
I said it
far and away my biggest position, by far and away, and almost, you know, a very significant part of my liquid net assets. You know, outside my properties and shareholdings and stuff, you know, in Real Vision or whatever, you know, it's Bitcoin is the bet.
You know, I said the other day, I said, you know, for this is not a speculation, nor is it a hedge. This is a deliberate corporate strategy to adopt the Bitcoin standard. That's what we're doing, right? And I think that lots of people want to minimize what's going on here, or they're afraid. They're in fear to actually come out and say what they believe.
Mike, they don't understand yet. People are, it's like, as you know, you suddenly get to that point where it's like, oh Christ, I get it now. You kind of think you get it for a while, then you question yourself, then you sort of get it, then you realize you know nothing, and then you come to the epiphany, is not knowing anything about it apart from one core set of things, that this is superior to anything else around it, and it could be an entire ecosystem, a whole structure. That's all you need to know. After that, it's like, okay, I got hard money with upside. Brilliant.
And so now we're sitting here waiting to see how long it's going to take for all the other rational actors in the world to come to the same conclusion.
Exactly right. And you know, that's the journey. You know, we're launching this crypto channel on Real Vision. It's part of the same bet. I know where this is all going. And I've been talking about this in 2012. And I knew that macro and crypto were about to collide. And I knew it was going to happen in the next recession. Or I guessed it would. And here we are. And then what's happened is you've actually moved it on further
by saying, okay, it's not just about markets and investments and everything else. We're now talking about a new standard that becomes the new gold standard, i.e., corporations around the world, Apple with their balance sheet, and everybody else should think of this as a reserve asset, which was my point that I've been talking about, is this is the world's most pristine reserve asset. And that's what you're doing. You bought a reserve asset and put it on your balance sheet. Brilliant.
Imagine a CEO of a construction company that said, we thought we'd start building buildings with steel this year. And every other construction company saying, oh, what a risky thing.
That's too expensive as well. And all the other arguments that you would have had. We've not tested it in earthquakes or whatever it is. I think we've covered a lot of ground, and I think we'll probably have another conversation down the track because there's a load of things. I love the philosophical things that you're thinking about, and just also how you've observed the tech industry and everything else. So I'm definitely going to get back in touch with you again, and we'll, as your thinking evolves and as other people thinking evolve, it's just nice because you're outside of the noise of a lot of the financial market stuff, and you're looking at it differently, and it's brilliant. And just look, bravo you that. As you said, it's a logical conclusion, but most people haven't reached it yet. And you've done something really inspiring for a lot of people.
Well, I would return a compliment, though, and point out that I was obsessing over everything that you published before we made this decision. And so the truth is, you're more that you and the entire crypto community that went out there, especially on YouTube, and published everything. They're the inspiration, and it's a wonderful community, and you can learn a lot on YouTube. So if people ever wonder, does anybody listen to the stuff we say? The answer is, yeah, I listen. Every one of my board members listened, right? So we wouldn't be here. I wouldn't be here talking to you, nor would I have done anything had you not said what you said when you said it.
That's very kind.
Otherwise, I welcome the opportunity in the future. Thanks for having me.
But yes, I loved it. I reached out on Twitter. I said, listen, I'd love to tell your story. And you replied, I love Real Vision. I'm like, oh, that's great. We're all doing the right thing, spreading the word. Mike, brilliant to speak to you. Thank you ever so much for your time. I'm sure people are going to get a lot out of this.
Thank you, Ralph.
Hey, Real Vision viewers. A quick pause to introduce you to today's sponsor, Axelar. Axelar is building the rails for the next wave of global finance. Not just crypto, but the future of how assets move, how markets connect, and how institutions plug into open systems. Think of it this way. Bitcoin brought digital gold, Ethereum brought smart contracts, but Axelar is bringing connectivity, the secure link between your favorite blockchain and traditional financial institutions, rushing to plug in. It's why top-tier firms like Dragonfly, Polychain, Coinbase Ventures, and Binance Labs are backing Axelar, and why global giants like Deutsche Bank, MasterCard, Apollo Global, and JP Morgan are already building on it. If you believe the future of finance is open, programmable, and interoperable, Axelar is the gateway. Want to digest deeper? Visit realvision.com/Axelar or follow on X at Axelar. That's AXELAR, the gateway to open finance. Today's video is sponsored by VeChain, the leading layer 1 built for real-world adoption. VeChain launched all the way back in 2015, built for real-world utility before most people had even heard of blockchain. One of the oldest protocols and boasting 100% uptime since launch, it's known for powering real-world solutions and partnerships with global brands like the UFC. Now, they're entering a new, user-focused chapter powered by adoption in the VBetter ecosystem and an ambitious technical roadmap dubbed the VeChain Renaissance. Renaissance builds on VeChain's history of real utility and adoption to deliver a faster, more flexible core protocol, designed to meet the needs of builders and drive mass adoption. The next phase kicks off on July 1st with the launch of Stargate, VeChain's new staking program. It's an evolution that brings VeChain closer to delivering its vision of a world powered by Web3 without compromising on reliability or stability. The future is here, and it's scalable, sustainable, and evolving with purpose. Check the links in the description to find out all you need to know about VeChain Renaissance and the updated staking opportunities available through Stargate.
Hey, thanks for sticking around to the end. Look, if you enjoyed it,
hit the subscribe button and check out the video here on the right-hand side. I'm sure you'll enjoy that one as well. And if you're ready for more, go to realvision.com/join. I'll see you there.